There's a lot of banks that will rely on their partners for their API solutions and maybe not have a middleware. They'll have a direct connection between a Finzly and their core banking system or whoever in their core banking system. That is good, also still limiting because now the plug and play is between your two providers, not with the bank or credit union in the middle.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Thanks for joining us, everybody, as part of this special series of Beach's Wrestling Payments podcast, FinTech Shark Week. In this episode, we're going to tackle some of the biggest myths holding financial institutions back from innovating and competing in today's rapidly evolving payments ecosystem. So we're diving into the realities of core provider relationships, exploring how institutions can kind of maintain those connections while building flexibility through API-driven platforms and payment hubs, we'll say, from breaking free from the kind of we're stuck with our core mindset to transforming payments from a cost center, hopefully into a revenue driver. And this conversation is all about practical strategies for staying competitive without waiting years for core systems to catch up. So joining me today, really excited to have Brian Anderson, the Vice President of Banking Transformation at Finzly. Brian, you want to introduce yourself and tell the listeners a little bit about the work you and Finzly are doing in the payment space.
Oh, thanks, Elyssa. Thanks for having me. I'm really excited to be part of dispelling some of the myths out there and making sure that all of the credit unions and banks that are in our space and in our world are learn what's the art of the possible in innovation today. It really has changed dramatically over the past decade. My role here at Finzly is to help open the eyes of the financial institutions that we work with to the possibilities of innovating and adopting a best of breed strategy for money movement. For us, what that means is money movement means just about any kind of movement of money from one account to another, however way you may get there. And so Finzly, I've been here now 7 years trying to help the financial institutions out there understand what can be different. We are not a core provider. We partner with many core providers who provide essential services, really critical core banking services to the credit unions and banks, and we integrate very smoothly with them to try and automate and maintain a focus on straight through processing and a reduced operational overhead for anything we do. And so from an innovation perspective, we're excited to hopefully reveal some of those things that we've done to help the banks and credit unions earn more from their efforts in the money movement space.
Great introduction, Brian. Thanks for that. So let's get right into the myths here. One of those being folks feel too tied to their core to really innovate at speed, right? They feel locked into their core providers, say roadmap, and that's valid. But, innovation doesn't always have to run through your core. Sometimes it's really about building around it. And there's so many solutions out there that can help these institutions solve for member and customer payments needs today, right now, and then in the future. How are you seeing institutions successfully navigating this kind of mindset shift from core reliant to core complementary? And what opportunities does that kind of open up?
Right. And I think this mindset shift started occurring probably at least 15 years ago, if not longer. But when it really started accelerating in our sector is the banks and credit unions, it was easier. You could take all in one from your core provider, especially when you're a smaller institution. You don't want to have to vet too many vendors and you want to rely on solutions that you can count on. But then they realize as soon as they want to do something different or new, or they have a customer or a member that comes in with a unique need, it's hard to respond when you have to rely on the core for everything. I mean, not everyone can be great at everything, right? And the core providers are good at many things, but sometimes there are areas where people have innovated. And I see good institutions, ones that are forward thinking and innovative, trying to pursue a more best of breed approach. And to the credit of the core banking providers, those core banking providers have been migrating to an open strategy, meaning opening up APIs and other ways of integrating with their services to allow companies like Finzly and others to come to their financial institutions and then partner together to make the world more innovative. One way where I see different institutions doing this is because of the world of modern cloud computing, what we would call microservices based applications or apps, right? In apps in your app store, whether it's a mobile app store or Windows or another platform, where REST APIs, which is common language APIs, are easier to build, to adapt, and integrate with other systems. You have ways of taking platforms like a digital account opening platform or better digital banking experiences for your customers and members, or better mobile banking experiences. For us, better payment experiences, being able to automate the process of delivery, even transferring money from one account to the other, while doing it in a compliant and integrated way to all the other systems at a bank or a credit union that are important, whether it's anti-money laundering or fraud checking or OFAC screening. All of those things should be something that are automated operational experience, and the customer should never know that they happen. And the customer should only understand,
Right.
I want to move money from here to there, and everything's good. So in order to get to core complementary, which I think is one thing you shared, you have to be asking your core banking partner to say, I'm going to open a way for your other best of breed providers to integrate. That should be essential to the evaluation of any core provider, is that they're open to these ideas. And then you need to figure out from a vendor like Finzly or others, what does it take for us to integrate with you? How long does it take? Have you done it before? How intense is my level of support at the financial institution for this, or is it something that the vendor takes care of? And generally, it's the latter. So all of those things open up the possibilities and really kind of change the mindset of the organizations to becoming either core complementary in attitude, or just open in attitude to understand the possibilities.
Well, that's great to hear, because I didn't want to put a negative spin towards cores.
I'm just trying to be nice.
Really
I'm trying to be
right?
nice.
And
there are ones that
this
don't.
Relationship. Yeah, no, I love it. It really is a complimentary thing, and the fact that you're having conversations and they're getting more ready to kind of open up and allow these other technologies in. I mean, the future, and I've said it time and time over the last 5 episodes, it's collaborative. So to see everybody kind of coming together is great. But I'd love to kind of shift the conversation slightly to talk a little bit about, we'll say, our next myth to bust is kind of payments are just a cost center. Like, that's the mindset, right? They're not necessarily a growth strategy. So they're often seen as this piece to the puzzle that just needs to function. It's critical, it's important, but it's not necessarily seen as something that can kind of fuel growth. And that's something we're trying to shift here, right? Payments should be the strategic lever where, customer experience, data, and revenue potential really can all intersect here. So if we're not building around payments, I think we're missing a really big opportunity. So how do you think institutions can kind of start thinking differently about their payment strategy to unlock new revenue opportunities and diversify beyond traditional deposits and lending income?
That's a great point. It's something that most of our early adopter financial institutions almost already understood, that a non-interest income strategy through payments and the fees related to them is a really great smoothing opportunity for revenue. Most banks and credit unions are subject to the whims of the interest rate environment. In good interest rate environments, they make good lending margins on their loans versus their deposits. In more difficult lending environments, they make less loans, they have less spread, and it causes a revenue drain. Payment income and money movement income happens all the time, regardless of what happens. So one of our institutions here at Finzly, one of our early adopters, had already kind of gone down the road of a strategy to promote diversifying revenue streams, and actually generated 40% of the bank's income with payments, just payments, which is a target that is pretty difficult to achieve these days, but it's possible. It shows the art of the possible. And what the art of the possible is with payments is usually it starts as a commercial customer or member opportunity. Any credit unions these days, you'll hear them talk about positioning for small business and medium-sized business growth, because unfortunately, consumers tend to expect everything to be done for them for free. But that's changing. So the world of instant payments with RTP and FedNow, you can look at someone that uses, say, a mobile wallet like a Venmo or PayPal. Venmo or PayPal will charge that consumer for the instant ability to move that money to their bank account. And they'll charge them multiple dollars for it. And it's something that consumers in credit unions and banks it's something that the banks and credit unions can also do for their consumer members. More likely, there's a unique use case in your commercial customer base where you can process, payroll or group payments or bulk payments or some sort of unique experience. Like, I'll give you an example of a homeowners association, right? Homeowners association has hundreds and hundreds of people and members of the homeowners association. Those people have to make regular payments to the HOA for different reasons, whether it's dues or utility bills or snow removal services. If you can provide to HOAs or similarly municipalities this ability to easily process and reconcile those sorts of payments and make it as straight through as you can without weird manual intervention, that's a very valuable service. So you're not just providing the payment, but you're providing an operational ease of use to those particular HOA companies, municipalities. That's just one example of many that we've seen out there that will unlock new revenue capabilities because we're finding a valuable service. You're taking the operational burden off your business customers and taking it into the bank or credit union. And that's of value. That's something you can actually generate value from.
Right. And it kind of makes that relationship a little stickier.
Much stickier. When you control workflow, whether it's digital banking based or file based or really great API based, then that's a great way to do things. There's another bank in our region here in New England, a bank I'm thinking of here in Connecticut, started working in the payments as a service space. And what I mean by that is they worked with an online bank, a bank that is not really a bank. It's a FinTech, right? All of the accounts for this FinTech sit with that bank. All of the payments that are made for this FinTech go through that bank. And to the tune of 1 or 2 million ACH payments a year. They make good money on that. And that's a totally separate business line than the rest of the financial institution.
Yeah, and you had touched on municipalities. I think, especially with the shift at the government level going, electronic, as far as all payments, the states are soon to follow and the towns, and I think there's going to be
no more
big
checks.
Opportunity there. Yeah.
No more checks. And when and a lot of banks have made money on the back of lockbox and check processing for years. There's no reason that can't become more digital, more electronic, of similar or better value. And the bank should continue to monetize that, but hopefully reduce the operational overhead.
Right. So you had mentioned, your Cash Apps, your Venmo. So I do want to talk a little bit about the idea or the myth, we'll say, that, our current technology or positioning really puts us in a place where we can't compete with big banks or, FinTechs, right? And it's easy to fall into that trap of comparing yourself to these mega banks or these flashy FinTechs with huge budgets. But that's not the goal, especially here with Meech and a lot of the work we're doing around our surveying. We really want to provide these benchmarks that show you what your peers are doing and what's possible for you, right? Before the market saturates with all of these big banks and fintechs kind of coming in and taking over. Just remembering kind of, these mid-market financial institutions, you're not trying to be these huge fintechs, these big banks, right? You're trying to serve your community in a modern way. And I think there's right-size solutions built for institutions, just like the listeners listening right now, right? And the trick is just kind of figuring out what fits with your strategy and not theirs. So, you're talking about, deposits and the deposits actually sitting with the banks, right? So with the Cash Apps and the Venmos, that money's not sitting in,
it's not.
Right. So, and there's no relationship there either, right? But there's still this ongoing battle for deposit. So how are you seeing kind of smaller mid-market institutions successfully use? And I think you gave, an example of this, but really use payments innovation to not only attract new customers, but strengthen loyalty and retention. I think that's kind of what you just kind of answered earlier, but if we can dig into that a little bit more.
I think there's more to it too, one of the things that we've stated, even in our marketing at Finzly, it's obvious. We said we are here to democratize access to modern technology and the fintech like feel and experience. And a lot of fintechs like us are out there doing that. There's platforms out there like Venmo and Cash App and PayPal, but there's also many others, digital banks like SoFi and other institutions. But when you look behind the covers, there's a name of a bank behind there. Like there's always a bank account. It's not just a mobile wallet. Mobile wallet is a transient thing, right? If the money eventually you want it to be in a bank, especially if a bank is offering you a way to generate some interest off of your money, whether it's a consumer or a business. So once you have that bundle of services, you can compete with the big boys because, like you said, Elyssa, there's millions and millions of dollars in budget there. But we service many financial institutions, and through us and through other fintechs like us, a lot of the banks and credit unions can introduce a very similar, if not better, experience than some of the big institutions. And by doing so, you kind of democratize access to that ability to attract customers, attract deposits. For example, if you take an app like Robinhood, right? Robinhood is an investor app for mostly smaller individual investors. They're constantly promoting high yield interest accounts, interest deposits. How do they do that? They partner with many small, some community banks to do that. And so the bank account that you might hold at Robinhood is not with Robinhood. It could be with a community bank. And why not? Why not have that? As long as you have some good compliance in place to know your customer's customer. This term keeps coming up over and over these days of KYCC, know your customer's customer. Yep. As long as you have a good compliance understanding of who that is, and you can reconcile the transactions that are going to and from that deposit account and any payments going to and from that deposit account, then you're in great shape and you'll have the ability to compete with just about anybody. One of the other cool things that I think people can use to attract new customers and strengthen the existing customer base is be perceived as innovative. You may not be as innovative and maybe scary as a fintech, but when you have this entire generation of people under the age of, say, 30 coming in, they rarely, if ever, go to a bank branch or a credit union location. They want to understand that I can adopt solutions and be able to receive an inbound real-time payment. I want to be able to see that in my account. I want to be able to move money however I want to move money, and just enable that for me. And if you can do that with some modern solutions, then you'll never lose that customer. You won't, certainly you won't lose them from your institution, but you won't have that somewhat ghosting process of moving their activity to another bank account at a fintech bank, because there's a lot of digital banks out there that are trying to be no brick and mortar, no community bank relationship, no community member focus like the credit unions provide. And you got to continue to differentiate against that and say, hey, we're not only your innovative partner, we're your local partner. And when you need someone to talk to, we'll be here.
And that's that relationship piece that's missing, I think. In
yes,
your
you need to have that. I had a terrible experience recently with one of the banks that I used for a high yield savings account. And that high yield savings account, moving money in and out of it, I had a problem. I tried to contact them. Good luck with that. There's no contacting a person.
It's like, I love calling and having someone pick up. And I know automation and your chat bots and everything's fun, but there's just times you just need to speak to somebody. So
right.
You just hear people. Have you ever been, in a place where you just hear someone on the phone, they're doing it, and they're like, representative. They can't get through.
I've screamed a lot worse than representative into my calls. I'll tell you that. I hope they don't record them.
Oh my gosh. I bet you they do. For training and, experience purposes, right? Mm-hmm. So I guess little recap of these last few myths before we get into the next one. Legacy systems, they're real. They can feel really heavy, but it doesn't necessarily mean you're stuck. A lot of progress can be made with small strategic moves, right? Whether, rethinking how you manage your vendors, ensuring your customers' customers and what implementing a program like that looks like, tapping into middleware options, or just really tackling one problem area or opportunity at a time, right? You don't have to rip and replace.
I'm glad you said
just start
middleware because
moving.
I forgot to say middleware. I'm glad you said middleware because that
Go
is
for it. You
really
got
what's,
something to say about middleware. Take it
yeah.
away.
So talking about freeing you up. So there's a lot of
Mhm.
banks that will rely on their partners for their API solutions and maybe not have a middleware. They'll have a direct connection between a Finzly and their core banking system or whoever in their core banking system. That is good, also still limiting because now the plug and play is between your two providers, not with the bank or credit union in the middle. A lot of solution providers out there now are providing easy to adapt middleware solutions that says, bring your provider, bring whoever. We're going to run it through our banks or our credit unions middleware. We're going to control that. We're going to look at you said earlier, Lisa, data. We're going to look at the data, what's moving where and how. We can capture that in a data warehouse solution. A lot of people use things like Snowflake today to combine all that data into one place. Once you have that middleware understanding, or even from us directly, we can give you an understanding of the data that's fueling the movement of money here from here to there. Once you have access and control over that, now you want to entertain a new core provider, you can. You want to entertain a new payment provider like Finzly or one of our competitors, you can. You have that disconnect. You have that ability to disconnect from your existing provider set and move to a different provider set. And that is something I see a lot of these days. It's a lot of even community banks.
A lot of flexibility.
Yeah.
Yeah. Hands-on control and flexibility. Yeah.
Yeah.
That's nice.
Exactly. And not that expensive.
So
not that expensive either.
Well, that's a plus, right? So moving into our final myth here, I think there's sometimes just a disconnect internally with internal, even external stakeholders. And we actually did an episode on kind of breaking this siloed mindset internally and externally. But I did want to touch on this because some of the responses to our survey kind of lack, or what the hesitation, I guess I should say, is jumping into these relationships. Why don't we want to explore this further? And a lot of it is just buy-in from the top, right? And this backing at the board and executive level. So there's this kind of idea that technology decisions are just IT projects, right? Not necessarily a business strategy. A lot of financial institutions still treat tech decisions like their IT's responsibility, but these are really the business's strategy decision, right? And so they impact how you grow, how you compete, how you serve, and they really belong in the boardroom, not just in a tech committee, right, meeting. Fintechs isn't just kind of a cool techie word, right, and a buzzword. It's really a tool to get you to where you want to go. So how would you say executives and boards should be reframing these conversations to ensure that technology investments are directly tied to long-term business strategy and competitive advantage? How do the folks really advocating to move forward in this space get those, the ears of the executives and the board?
That, I would say, would be the biggest myth and most difficult challenge that I see out there of all of these is changing board level mindset, changing C-suite level mindset to get out of. These are not IT projects at all. The only reason you spend money in IT is to generate either value with the customers or members, or to smooth operational efficiency strategically and make the bank or credit union more scalable. It's very frustrating from our perspective to come up with discussing something innovative with a business owner within the bank or credit union and then come upon the idea, oh, this is just another project in the annual budgeting cycle. And we have all this other non-discretionary IT spend that we have to do every year with our providers. And they're not planning for a budget for unexpected spend or innovation spend or new business spend. All of those things have to change. That whole mindset of here's what we spend every year, and maybe we'll spend 5% more, and we're going to allocate it to these 3 projects for the year. And they can't respond at all to anything new that comes along to attract new customers, to build more loyalty, to market and gain new deposits more efficiently through a unique idea. So one thing that we are trying to advocate for in the financial institutions we talk with is you need to get away from annual budgeting. You can have a plan, but you need to have a plan to change a plan, change that plan on an ongoing basis, have budget available to address those things. You may spend it, you may not, but you have that ability to respond more quickly if it isn't just something that you do in September and October every year. Then from that perspective, to reframe the conversations, it does have to be driven by a business strategy, because otherwise it's just another thing on the wall. If you don't have a long-term mindset and say, I need a strategy, that this is what we're going to do with this spend. This is our project. This is what the vision is 3 years from now, 5 years from now, of where we're going to attract business. This is how we're going to gain some sort of ROI. And it may not be in year one. Like most boards, it has to be in year one. That's short-term mindset. So the other piece of being able to reframe the conversations for the long term and for competitive advantages, a lot of community banks and credit unions do not have a role of what I would call a product lead, a product manager, a strategic product owner. Big institutions do, right? You'll have a strategic head of payments. In fact, one large regional bank recently put a new role in the C-suite called Chief Payments Officer. Now, just over payments. That's his only job is payments. And so that says to me that the trend in the market is that you have to have someone who owns the product. And in a traditional community bank, for example, we meet lots of friends at Meach who are head of deposit operations, or they're a payments professional with expertise in ACH or wires or whatever it may be. But their remit is to not look at strategy. They may have great ideas about what a new payment strategy might look like, but who's going to own that and own that business strategy? Who's going to take it to fruition over the next 2, 3, 5 years? That has to come from the C-suite and the board level at a community institution, and someone's going to own it. Whether it's someone you hire from the outside, or just a consultant to help drive it, or whether you take it on board and give someone that responsibility, it has to be driven. Otherwise, it will die on the vine.
Right. No, that makes a lot of sense. You have, again, it just goes back to kind of being siloed, right? They're looking at these deposit operations people as, one, skill set and one area of subject matter expertise, right? So how do you get that big picture solution in front of the board? And it makes sense to have it kind of live with one individual.
Whether you include this or not, Elyssa, is up to you. But one of your board members came to me at the exhibition. Great, relatively large community banker, right? Knows payment strategy, came from 2 really large banks prior, wants to implement, new ideas. It's a struggle. Like we had an idea together about what to do in one payment area, and it got put on the shelf because other priorities took place that were mostly non-discretionary priorities. And so it's a very interesting world. And
I think a lot of it comes down to this conservative risk tolerance for that business line at the board level, and trying to take a look at risk appetite enhancement, just growth, considering you got to do something.
Well, they are doing something. They're doing something
doing it in
today.
the right way. Risk can be a good thing, right? So
and
just
even
looking
here,
at the opportunity to offset,
It's the understanding of risk, right? In this case, there's actually very limited risk. But when someone says international or foreign currency, most board members of the banks are not from that world. They're lenders or community bankers and rarely touch that space. And they worry, is there risk related to this? And until someone with experience explains, not really, no. We're not taking foreign currency risk. We're not taking foreign country risk. We're actually transferring that up towards larger banks who then deal with that for us, while also making money at our institution. It's something that, I just spent a long time in it and understand it, but a lot of people don't. And I've heard it so many times at community banks, doesn't that expose us to country risk? No, it does not. And it's just a misunderstanding. And until you get through that willingness to understand, then you get the opportunity comes to you.
No, it's great conversation. Any closing thoughts for the audience, the listeners,
Sure.
I should say. So, any closing thoughts for the listeners?
So I know it's certainly a challenge doing the day to day at a community bank or a local credit union, and those heads of deposit operations, and trying to strategize, what's the next investment beyond your core, or even with your core, in relation to payment services, and just be optimistic and be open. Things have changed a lot over the past 10 years. And, most traditional ways of doing things, there are new ways of doing them that, some of your customers, even in a local regional community bank where you think the customers only do it in a certain way, that's changing. And you'll be pleasantly surprised that, hopefully your area is somewhere that bank and credit union can invest in, and you guys will have an easier time of it. I was joking with some of the niche members at the recent conference that wouldn't it be nice to go home at 5 o'clock because the system was doing the work for you? And so that's my goal, and that's what Finzly's goal is, to make the lives of the banks more profitable, but also make the operational professionals' lives easier. And that's the possibility that exists out there that hopefully we'll all get to.
That's a great goal. We love that goal. So that'll do it for today's episode. Big thank you to my guest, Brian Anderson from Finzly, for joining the conversation today. Thank you for sharing your insights and experience. And as the listeners out there, as you think about the challenges you're facing, take a moment to consider what's truly holding you back. Is there a real limitation, or is there an opportunity that's waiting to be explored? So whether we've confirmed a myth for you today or uncovered a hidden gem, I really hope today's discussion gave you something useful to take away and carry forward. We appreciate you spending your time with us, and we hope you'll tune in for the rest of the episodes in this series. There's a lot more to come. Take care, everybody.
On behalf of Niche, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of niche.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.